Aha, we are back online. Say hello to everybody, Sam.
Hi, everybody, Sam. Happy St. Patrick's Day.
Welcome, everybody. Welcome. We are our happy half hour today here on March 17th, a very special happy half hour of all people. Let me see if I get our chat going so I can see the chat people as well. I'm David Shakavich. For those of you who may have been here for the first time, I am the president of Carolina Retirement Planners. This is my daughter Sam, a partner with Carolina Retirement Planners, and we are here to help folks. And today we have kind of like an extra sort of a fun little thing to talk about during this year. We also have, before I bring a special person here, let's say hi to Amy as well.
Happy St. Patrick's Day.
Amy is our director of fun.
Our director of client fun, and you are bringing the fun today, aren't you, Amy?
Oh, yeah. And look at Matt got me. He actually went to the store, got Guinness, and then got these balloons to like make it extra ridiculous. I love that man.
That is amazing.
It is amazing, right? I was like, oh, babe, I love you. So just adding to the crazy of my day. So happy St. Patrick's Day, everyone. I'm Polish, but I'm loving it. So
yeah. That's right. We're all Irish. Even us Polacks are Irish on a day like today, you know?
Everybody's a little Irish on St. Patrick's Day. I actually am a little Irish on my dad's side, but yeah.
That's right. But I have another person to come and enjoy. Let me introduce someone special here for a number of reasons. This is Kristen.
Oh my gosh, you're adorable. Look at that dress.
And Kristen, what have you, up till now, what have you been doing here with us?
I have been the director of First Impressions. I welcome people in and say hello and help them with whatever they need.
But it's a special day because just this morning, Kristen has taken passed a state
my state life insurance exam.
She has taken the life insurance exam for the state of North Carolina, and she has passed with flying colors. And over time, she's going to continue to help move from just being the director of First Impressions to helping people maneuver all the stuff we've got, money moving around and all the applications and things. So I'm so happy, and I'm so happy that she passed it. And I also think this is a wonderful design. I mean, I got this paltry little here, but look at this. So just everybody give a big wish for Kristen for her passing her test this week. Passing with flying colors first time through. So
thank you guys. Can't wait to help out.
Congratulations. Yay.
We are looking forward to it. And we also have Bill, Brad, Robert are joining us, saying happy St. Patrick's to us.
Mm-hmm. Also Rich and Nadine and Al. Hi, y'all. Thank you for joining us. And Mary, our very own Mary, is here, and also our very own Brenda. Hey, y'all. Thank you for joining us today. Happy St. Patty's Day to everybody. Oh, and Amy's mom, Teresa, has joined us as well.
Hi, Mom.
Yeah, so we've got the festivities going.
That's right. It's going to be a good time today.
Oh, I made this. I'm a little afraid to drink it, but I just have to show it off because I made it.
Don't do it.
I made a green beer with food coloring. Amy told me that I'm going to have a tough time tomorrow, but I don't know if I'm going to drink it or not. But it is very green, so I did.
I mean, that's all that green beer is it has the dye, and then tomorrow you'll just be like, oh.
Like,
oh, okay.
I suspect that in Ireland itself, the folks are probably not drinking green beer. I may be wrong,
No,
but in
and
Ireland
actually,
itself.
I learned a few things. So I was doing some research, and did you know that green was not originally the color associated with St. Patrick's Day? Originally, up until 1798, the year of the Irish Rebellion, it was actually blue was the color associated with St. Patrick's Day.
That's crazy.
Yes. So that's
Well,
a,
that's
a
interesting.
little bit of
So why
trivia.
did they switch from blue to green?
I don't know, but I imagine it has something to do with the Irish Rebellion in 1798. So I don't.
Okay.
I know that that's the year that it changed to green. So I would imagine it has something to do with that. We could do some more research, and I'll come back next year. Next year we'll go to deep dive.
I always tell my grandson that my favorite color is green. And when he was little, he's like, why? And I would say, because it's the color of your eyes. And so, yeah.
Let's go start taking a little bit of what we're going to talk about today. And I'm hoping folks will enjoy this. We've kind of sitting there with
Dad, take it
wrong
down.
one. Yeah, I got the wrong one. Thank you.
Sorry, guys.
That's it. There we go. We are first of all starting sort of with our green March 17th. It's actually rather interesting because 2 years ago on this day we saw the first person in the office here, and we didn't see anybody for over another year. Everybody went home, and we just, with COVID-19, we got away from it. But we are back now. But a little something to enjoy the green for March 17th, coming back and sharing with everyone. But what we're going to talk about is sort of a little bit of a history of market crashes over time. And I went out, I found a few things that kind of represent the market crash that goes back in 1929. Remember, we had the big crash where the Dow fell, billions lost in trading. Remember the days when people actually had the ticker tape watching what was going on. Here is one guy running out of the board, jumping out the window. I have one here that's sort of a little cartoon about jumping. There was a lot of people that committed suicide falling in Wall Street. I actually found a couple pictures of people that had fallen, but it just didn't look like it would work here. But here was one where they're saying $100 will buy this car, must have cash, lost all on the stock market. So 1920 was a big fall. It was one of the first, probably the first big fall we've had. There were some prior to that, but this is one we know the most. If you look at that time, it fell. I think it was the Black Monday, October 28th in 1929. Things fell from like 375 down here to nearly 50. And that was just such a huge crash.
Wow.
And you look at it, it fell, it kind of bounced around, and the Dow didn't really get back up till 1954. If you think about it, from 1929 up to 54, that's like 25 or 26 years that it took to recover over that time. Really a big drop for the Dow. Probably the worst time we've seen in our history. But let's look at some others. We had a big drop in 1961. In 1961, the S&P fell about minus 28%. And when it did fall, it actually crashed and stayed down for about 5 months. But then it came back up in about 14 months, it recovered. So there we had a big drop, but it fell for a little over a year back in the 1960s. I don't quite remember what was going on then myself, but I do remember about the time in 1987. I bet you many that are out there can remember the big drop in 1987. 1987 was another Black Monday. And you may remember that in that first day, it fell for minus 22% in that first day. And then it fell even further for the next few weeks, and it fell to a total of minus 33% in 1987. And it took from about 87 into the middle of 1989 when it came back. So it was down for, let's see, less than 2 years, came back. But that was one, I remember that well. I was working at Corning, I think, at that time when it fell. By the way, it wasn't just the US that fell during that time period. This is the FTSE, the FTSE, and that's actually stands for the Financial Times Stock Exchange. That is the London Stock Exchange, and it fell about 40%. It went from about 2,400 down to 1,500, and it fell about 40% during that time. And actually, a whole bunch of other companies all around the world fell during that time. We had a big fall over that time period.
Whoa.
This is one that I'm sure you all remember. This is 2000 up to, this is 2013. And we had one crash from 2000 down to about 2003. What was that? Do either of you remember what that first crash was?
The 2000 and that wasn't that the .com bubble?
This was the .com crash. That's where that was the dot crash, where the .com. That's, remember when there was the whole world of everything was going into .com. Everybody was selling pet food and all kinds of things were in the .com world, and it climbed up really well, and then boy, it fell. We also had a drop here in the fall of 2001 in 9/11 as well that came down, but as a whole it will still head down. I think it went down for, I think it was about 45% or so overall, a drop, and then it climbed back up. We got just for above what we had before for a little while, and then we had another big crash, a crash that went down nearly 50%. What was this crash?
This the mortgage bubble, right?
Yeah, this was the mortgage bubble. This is where we had a whole bunch of things. People were selling slicing different, they began to sell mortgages to everybody. If they could fog a mirror, everybody got a mortgage, and they put them all together and sell them as bonds. And the whole thing, nobody noticed it. It was very few people realized what happened, and it fell by minus 50%. That was the whole crash of the mortgage world. And then it climbed back up. And here we are 13 years later, and 13 years later, we were still down by 3%. After 13 years, from here down to here, we were 3% below after 13 years. A lot of people call this the lost decade. We made no money for really 13 years during that time period. And that's one that there's a lot of lessons there as well. And then we had another crash here in 2000, or 2020 rather. And this was the COVID-19 falls, where it fell during that time period. It fell from here to here. It was minus 28%, the S&P 500, in just a few weeks, 2 or 3 weeks. But by the end of the year, we were back up to plus 16%. So it recovered. I like to say this crash was more of a bounce. We came back really quick, largely because, you know, we started cranking up the printing presses, and we just started giving money to everybody you can imagine and pumped a whole lot of money into the economy, and that brought it back up. Of course, we now have a big, you know, a lot of money we owe that we printed at that time, but that's one reason it came back so suddenly. And this is a little chart that I saw as one of the things I found out there in the Google land, and it's showing from 1870 back to about 2020 what the ups and downs looked like over that time. This is a logarithmic form, that's why it's kind of a straight line. But you can see there were periods of time from about 1910 to about 1915 where it fell. This was 29 to about 54 where it fell. This is 1970, and this was the one we just looked at, the dot-com bubble. Kind of shows the ups and downs and the falls during this time. And I'd like to spend a little time looking at this part here, these last few years, that we can look at and think a bit. Back here in 1970, the market fell here, maybe really 1969, and it stayed down to about 1985. So we were really 15 or 16 years, the market was down. Then we had a nice increase. We had that little Black Monday back in 87, but it bounced back pretty quickly. And then here was the dot-com bubble and the mortgage bubble. And we went there for 13 years where we didn't make any money and went up. Now, the thing to remember is if you're working, if you're still working and sticking money in your 401k every year, and the market falls for these 10 or 15 years and you're still working, you can keep buying money in your 401k. In fact, it's kind of nice because the market has fallen. You know, in some cases, we had things drop in half here. If I'm putting $500 a month into my 401k, I'm getting to buy twice as many stocks during that time period because things have fallen in half. And then when it goes back up, I get a big boost because of that. So while you're working, these times when it goes down can be kind of good for you. It's a little different if now you've retired and now you have to reach into your pot and take out money that you need to buy your beer money and you know, live and pay your mortgage, pay your mortgage and things like that. If the market has fallen in half and you have to reach in and take money out, you have to sell twice as many stocks to get the money you need. And then when it comes back, the money's gone. So it becomes very different, these periods of time that we see that can last often many years, a decade or more without money if we're retired. And so you need to think about building strategies, and we've talked about that in other happy half hours and other things. If you're retired, you're now going from being a buyer where you're buying stocks to where you're become a seller. And you need to sell things. So you need to build a strategy that helps you survive long periods of time like these two, where you can go for long periods of time where the market is actually down. And that's something we've done in some of our other things before. Let me finish with one or two more things just for the hoot. I kind of did it. This is 2000 to 2022 there's like 22 years during this time period. This line here is sort of what if you had bought a CD back here and held it for 20 years, what kind of return would it give you every year to gain? Does anybody want to guess? You know, think about what's the gain over that 22 years. And the actual number is 5.7%. We started at 1394 and went to 4766, used a little calculator that lets us figure out what it earned, 5.75% over the 22 years of this century. Now, maybe we cut back and say, let's go look at it the first 20 years. How much did that earn? Over 20 years, it earned 4.29%. Maybe I go back and look at 2015 years. What did the first 15 years earn during that time? Now we're down to 2.63% a year for those first 15 years. And by the way, if we went back to 2013, we'd be minus 3%. So just a little something. Most of our gains have been for just the last, the last few years from the last 7 to 8 years have been most of the gains. Prior to that, we earned very little. Just something to think about over time.
That's a
So
good
that's a
way to
little
put it in perspective. Because like when you're thinking about it, you're thinking that, oh, you would have gained so much. I mean, I was thinking that like Forrest Gump analogy, like when they bought that Apple stock. But in reality, no. I mean, over the long haul, it's all been in, recent years. Sorry, that's my
Yeah, if you
perception
retired here,
versus
you did
reality.
really well, but if you
Right.
retired back here, you've got a problem.
Right.
And we don't know what is going to come in the future, but historically, when we look at all these times, we see that there are often these periods every 10 or 20 years where we have a flat period for some period of time. We may be due for another one. Just something to keep in track of all these things. And one last thing to think about is if you have a question, you're one of our clients, give us a call. We'll get together on a call or a Zoom. But if you're just here visiting and you want to ask a question, you can go to a website called Carolina15.com, and that'll take you to a little place where you can book a 15-minute call and we can talk about it. Any questions you might have or anything you're wondering about during our time. So Carolina15.com. You can call the office as well, but this is a quick way to make a call. So I thought I'd show that here. We are getting close to the top of the hour. Hope that was helpful. Seeing some of the crashes over time and what may be coming up. So Sam, what's next?
I think the wine drawing, right?
That's right.
All right. So I've got my festively green slips in here. So each week we raffle off 2 bottles of wine delivered directly to your door from Fermental Bottle Shop. To get your name in my jar, if you are a member of Facebook, you just click that you are going to attending this Facebook event each week, and we'll get you in here. And if you're a part of our email list, whenever you see the email come out to let you know what our topic is and a reminder of it, you just respond to that email and we'll get you into the wine drawing for that as well. And if you share either the Facebook invite or the email with a friend, we'll give you another entry into the wine drawing as well. All right. So the winner of 2 bottles of wine delivered directly to your door, special St. Patty's Day edition,
Drum roll,
is Martha and Dave M. So congratulations, Martha and Dave. You are our wine winners this
Yay.
week.
Congratulations.
Congratulations.
And for those of you who did not win, as always, please continue to enter. We love to give away wine and we'll continue to do so.
Yay, happy St. Patrick's Day. Congratulations.
To
Happy
everybody,
Valentine's Day, David.
have a great St. Patty's Day. If you're going to celebrate, be safe, have a great time.
Celebrating in my
Grab
backyard.
grab some Guinness.
I
It's
got
good for
it.
you.
Your boyfriend got
Probably
it
Guinness
for
over
me.
the green beer. I don't know. I feel dubious about this, but
Just
it's,
drink
I
it.
would be
It'll taste the
dubious,
same.
yes, you know.
Yes,
I
happy
did it.
St. Patrick's Day. Thank you, guys.
happy St. Patty's Day.
Bye-bye, have fun. See you next Thursday.
See you next week. Take care.